Today may be April the 1st, but the current downturn in Australian property prices is no laughing matter. Data from CoreLogic has been released today showing the fall in prices over the March 2019 quarter. Sydney is down 3.2%, Melbourne down 3.4%, Brisbane 1.1%, Adelaide 0.5%, Perth 2.9%, Darwin had the highest percentage falls at 3.9%, where Canberra 0% and Hobart 1.2% were the only capitals not to fall over the quarter. That's a national fall of 2.3%, or 2.7% if you just include the capital cities. Over the month of March, there was 0.6% fall in property prices across the nation. Tim Lawless, head of research at CoreLogic, stated, "Although the CoreLogic National Hedonic Index series trended lower in March, the actual rate of decline has been easing over the past 3 months. The 0.6% drop in March was actually the smallest of the month-on-month declines, since values fell by 0.5% in October last year." However, the international investment banking company, Morgan Stanley, have said that March is typically the seasonally strongest month for Australian house prices throughout the year. The recent slowdown in house price drops is likely due to seasonality, rather than the prospect that prices may soon bottom. They stated, "Price declines in February were less than the average decline over the past few months, but still faster than the average seen over the rest of 2018. This improvement is in line with the usual seasonal trends in house prices, with December and January typically significantly weaker." In other words, there may be a long way to go yet. CoreLogic's Mr. Lawless said, "While the pace of falls has slowed in March, the scope of the downturn has become more geographically widespread." He also talked of the impact of the upcoming federal election on property prices. He said, "Federal elections generally cause some uncertainty, which is amplified more so on this occasion considering the potential for a change of government, which will also involve significant changes to taxation policies related to investment. No doubt some prospective buyers and sellers are delaying their housing decisions until after the election. However, there is no guarantee that certainty will improve post-election considering the impact of a wind back to negative gearing and halving of the capital gains tax concession is largely unknown. It seems a reasonable assumption that removing an incentive from the market would result in some downward pressure on activity and prices for a period of time." As I've mentioned before, the Australian Labor Party, if elected, which recent polling suggests that they will, have promised to limit negative gearing from the start of 2020 to only include new housing, and halve the capital gains tax discount to 25%. This will surely reduce prices even further. Mr. Lawless was able to see the positive side, however. He said, "The silver lining here is that housing is now very affordable, and first home buyers are proportionally much more active relative to other areas of the country." And that's the March 2019 quarterly update for Australian property prices. Although nobody can predict where prices will go, one thing that we can guarantee is that investors can become skittish easily. If investors see that other investors are pulling out of the property market, it just may result in a downward spiral of insurmountable proportions. Personally, I wouldn't be investing in property in the current climate. Thanks for listening.